The right time to buy cryptocurrency. Cryptocurrency markets are fast-paced and volatile, leaving many investors wondering, when is the right time to buy? In this tutorial, we'll explore key factors, strategies, and tools that can guide you towards smarter, more informed crypto investment decisions. Whether you're a beginner or a seasoned trader, understanding how to approach timing in crypto is essential. Let's dive in. The cryptocurrency market is unlike traditional markets. It's extremely volatile, with dramatic price swings happening in short periods. This creates opportunities for profit, but also opens the door to significant risks. Timing your purchases can make the difference between substantial gains and disappointing losses. However, timing isn't just about guessing when prices will rise or fall. It's about understanding the factors that influence the market and creating a data-backed strategy. Cryptocurrency prices are driven by a variety of factors. To identify the right time to invest, it's crucial to understand these dynamics. Market demand and supply. Prices rise when demand exceeds supply and fall when the reverse happens. Bitcoin's limited supply of 21 million coins, for example, drives its value. Technological developments. Innovations in blockchain technology, such as Ethereum upgrades, can attract investor interest, increasing demand and prices. Global financial trends. Factors like inflation, stock market performance, and fiat currency strength have a direct impact. For instance, in times of economic uncertainty, many investors turn to cryptocurrency as a hedge. You'll often hear seasoned traders talk about buying the dip. This means purchasing cryptocurrency when prices drop temporarily but are expected to recover or rise in the long run. While it's a popular strategy, it can also be risky. Some dips represent natural corrections, while others result from market downturns where recovery could take a long time, or may not happen at all. The key is identifying whether the dip is temporary or a signal of deeper issues. Monitor market patterns and keep an eye on external influences like regulatory changes that might affect a coin's value. Investing in cryptocurrencies can be as much about psychology as strategy. It's easy to get caught in emotional traps such as panic buying. When prices are soaring, it's tempting to buy the hype. However, purchasing at peak prices usually leads to regret if the value drops. FOMO. Fear of missing out. Fear of missing out on a promising opportunity can cloud judgment, causing impulsive financial decisions. The best way to avoid emotional traps is to base your decisions on facts and data, not trends or peer pressure. While attempting to time the market is tempting, long-term investing often yields better results. Markets will always have ups and downs, but holding on to quality cryptocurrencies with solid potential is generally more rewarding than frequent buying and selling. The concept of time in the market emphasizes staying invested rather than stressing over precise entry and exit points. The longer you hold on to strong assets, the more likely you are to benefit from their growth. How do you analyze whether it's a good time to buy? Use market metrics like these. Historical price patterns. Review past trends of the cryptocurrency you're considering. Does it show consistent growth over time, or is it highly erratic? Trading indicators. Tools like the Relative Strength Index, RSI, can help you understand if an asset is currently overbought or oversold. When RSI values are low, it might signal an opportunity to buy. Market sentiment captures the collective mood of investors. This is often influenced by factors like fear, greed, or excitement about crypto trends. Using tools such as the Fear and Greed Index can help identify periods of extreme market behavior. For example, a market driven by fear might present opportunities to buy, as prices are often suppressed during these periods. On the other hand, extreme greed could lead to inflated prices, making it a less ideal time to invest. External events, those outside the technical aspect of cryptocurrency, can significantly influence prices. Some examples include regulation changes. Countries announcing stricter crypto regulations often cause short-term market downturns. Conversely, regulations that promote crypto adoption can create bullish markets. Economic trends. Global events like pandemics, inflation rates, or foreign policy decisions can affect investor behavior. Announcements from blockchain projects, updates or improvements such as ETH 2.0 can drastically influence demand. Keeping an eye on external events helps you identify opportunities to buy when prices are temporarily low due to non-project related news. Should you focus on timing or strategy? The truth is, most investors struggle with perfect timing. Instead of chasing short-term trends, focus on building a solid long-term strategy. Ensure this strategy aligns with your financial goals and risk tolerance. One reliable strategy for entering the crypto market is dollar cost averaging, DCA. This involves investing a fixed amount of money at regular intervals, regardless of the asset's price. For example, putting $50 into Bitcoin every month reduces the need to time the market perfectly. DCA is especially useful for beginners who might otherwise become overwhelmed by market volatility. It reduces the emotional stress of investing and lowers the risk of making poor decisions based on short-term fluctuations. Timing your crypto purchases also ties into effective portfolio management. Diversification, spreading your investments across multiple cryptocurrencies, reduces risk. For instance, balancing your portfolio with a mix of stablecoins, top assets like Bitcoin and Ethereum, and promising altcoins can help protect against market downturns. Education is a crypto investor's best tool. Thoroughly research the projects you're planning to buy into. What problems are they solving? How strong is their development team? What partnerships have they established? Likewise, stay informed about market trends through trusted sources. Building your knowledge is an ongoing process that will improve your decision-making over time. The history of cryptocurrency markets offers valuable lessons. For example, 2017 bull market. Bitcoin and many altcoins saw meteoric rises, with individuals making significant gains. However, it was followed by a crash in 2018. 2021 growth. Innovations like DeFi, decentralized finance, and NFT, non-fungible token platforms brought value and boosted mainstream adoption. By studying these cycles, you'll develop a better understanding of potential peak and correction patterns. Several tools are available to analyze and time your crypto investments effectively. CoinMarketCap provides real-time data on prices, volumes, and market caps. TradingView, essential for technical analysis, offering price charts, patterns, and indicator tools. Understanding how to use these platforms enables you to make decisions based on data, not emotions. Technological advancements in blockchain and crypto ecosystems can serve as indicators of potential price increases. For instance, Bitcoin halving. Every 4 years, Bitcoin's mining rewards are cut in half, reducing its supply rate and historically driving prices higher. Ethereum upgrades. Changes like Ethereum 2.0's proof-of-stake transition have boosted investor confidence, positively impacting prices. Stay alert to announcements of technological milestones for market opportunities. Sometimes, the best decision is not to invest at all. Avoid entering the market impulsively, such as when there's excessive hype and inflated prices. If your decision is based solely on peer influence or social media trends. If you can't afford the potential loss of your investment, take your time and assess the situation logically before investing. Patience is a trait that separates successful investors from impulsive traders. Cryptocurrencies often reward those who hold steadfastly through market cycles. By focusing on a long-term vision and avoiding knee-jerk reactions to price swings, you set yourself up for greater success. Your financial health should guide your investment decisions. Before buying cryptocurrency, ensure the following. You're not using funds needed for essential expenses. You've assessed your personal risk tolerance, how much loss you can handle without significant financial stress. Cryptocurrency investment should complement, not threaten, your financial stability. Always practice risk management when timing your investments. Only invest money you can afford to lose and use protective measures like stop-loss orders. These safeguards automatically sell your assets if prices drop to a predetermined level, mitigating further losses. Cryptocurrency markets move in cycles typically categorized as bull, growth, or bear, decline. Recognizing these patterns can help you identify opportunities for buying. Bull market indicators: rising prices, positive sentiment, and increasing adoption. Bear market indicators: falling prices, fear-driven behavior, and lower activity in the market. Define your goals before entering the market. Are you looking for short-term profits, long-term holdings, or a mix of both? Your objectives should inform your approach and timing decisions. Volatility is an inherent part of the crypto landscape. To manage it effectively, avoid checking prices constantly to reduce stress. Build a disciplined mindset focused on your chosen strategy. Join crypto communities and consider professional advice for valuable insights. However, exercise caution. rely on reputable sources, and avoid fully accepting any advice without independent verification. Stay vigilant against scams. Avoid investments that promise guaranteed returns or seem too good to be true. Focus on projects with real-world utility and transparent teams. Timing cryptocurrency investments doesn't mean perfect prediction. It's about being informed, strategic, and prepared. Combine your technical and market analysis tools with a long-term mindset for the best results. So, when is the right time to buy cryptocurrency? It's when you feel confident in your research, strategy, and financial readiness. Continue your learning, practice discipline, and remember, success in crypto begins with smart decisions rooted in education. If you found this video helpful, please subscribe and share it with anyone who may find it useful.